crypto, whether you hold, I mean, for me, it's holding Ether, others hold Bitcoin and other types of assets. But yeah, I'm pretty optimistic. Like I'm optimistic that I think DeFi and crypto can really shine here, even in an ugly market. I mean, right now, especially with stable coins, like there's so many stable coin opportunities week to week. I'm not moving money into every single one of them because some of them are newer protocols I'm not willing to risk my funds in, but um, I like I've got every long-term token that I'm holding. Every single token is either staked or in an LP. I've got, for example, all my curve or CVX curve is held now in concentrator, and then I just try to like make every single asset as productive as possible. And if it isn't productive, I question why I'm holding it. But anyways, yeah, listen to Dan Moorhead on the Bankless podcast. It's really a great episode. Actually, another one too that I just listened to is Olaf from Polychain. He's such a breath of fresh air to listen to because guy just continues to like live in crypto applications. He really has a message that resonates, for anyone who uh, who spends more time trying applications versus I don't know, hypothesizing bullshit on
Yeah,
Twitter.
yeah. So cool. I will check them out. And so I think we'll have quite a few people joined already. So hi guys. I think for today, and because we just launched Clever yesterday, I think we have got over 1.2 million dollar value of CDX locked with us already. So we want to give a demo on how the product works and just get your thoughts and feedback on this. And before we kick this off, I just want to add some comments on the research meeting process with Bankless style. So last week we did really great, and DeFi Dad and Hassan gave a really great presentation. They love the content, and they want to keep this running just for the entire session too. And we'll run that on bi-weekly basis. So we'll send out a spreadsheet just for people to sign up for the future meetings. So we'll have our call contributor Kruger on the call, and Kruger will give a demo on Clever. So Kruger, should I hand it over to you?
Sure. Yeah. Hey, everybody. Let me. I don't think I can share my screen. I don't know. Do you want to just pull up the main website? I'm getting a screen sharing disabled message.
I can. Let me check it.
I don't know if it's a local setting or not. Now we can do this the tough way, and people can kind of pull up Clever in their browser if they like to.
Let me just enable you to share screen.
Sure.
Yeah, I actually can't open the website while I'm on Zoom because
right.
of the VPN issue.
I think you need to be the host to share the screen.
What happened before? What happened to the previous meeting? Everyone can share screen, right?
It looks like it's letting me now.
It's okay now?
It's giving me more options than before. One moment. So All right. Let me see here what I can do. Apologize, folks. Please bear with me. I will quit and rejoin, and then I should be able to do it.
Cougar, we can't hear you. Hello, hello.
Yeah, I can't hear him either.
All right. Do I have audio this time?
Yep, we can hear you now.
All right. Great. Great. Okay. Do we also have streaming? Do we have everything?
Yes.
We're good.
All right, great. Welcome. Thanks for bearing with me, everybody. I'll give you a quick sort of walkthrough of how Clever works and what the website looks like. So the idea behind Clever is kind of does sort of two things, right? Number one is it gives people a way to have the whole governance process of CVX automated. So people come and lock their CVX into Clever, and we immediately on the back end vote lock that with Convex. And at the moment we're delegated to Votium, but the idea here is we are using these vote locked CVX in order to vote for maximum bribe return, just as anyone would expect with Votium. And then all of those bribes are harvested and compounded into CVX. So that's the first service is automating the whole CVX bribery process. And then the second is leverage services or lending services. So what we allow is we allow people to borrow a synthetic version of CVX against the CVX that they have locked with Clever. So at this point, what we have a 50% LTV limit. And so if someone deposits 100 CVX with Clever, they can immediately access 50 Clev CVX, 50 synthetic CVX tokens, and they can withdraw that as soon as they lock. These Clev CVX tokens, the way that we position it, we've been searching for the right language to help make this as easy to understand as possible. And so what we're talking about here is thinking about Clev CVX as your future yields. So when you get Clev CVX tokens, we call those your future yields because what happens is once you've borrowed those Clev CVX, your debt is paid back automatically each time bribes are harvested in the underlying for your underlying VLCVX. And so you borrow against your CVX or you claim your future yields, as we say, and then those future yields are earned. And so your debt reduces with every yield harvest. And that's the big picture. Now, what do you do once you have your Clev CVX is, well, you want to swap that back to CVX. And the product will provide two ways to do that. The first is called the furnace. And with the furnace, you're able to swap Clev CVX for CVX on par at 1-to-1. The second way will be through a curve liquidity pool, which is not yet created. So there will be a curve pool where people can swap their Clev CVX back to CVX, and that will be a stable swap pegged pool that will have some kind of a peg. And so the idea here is that whenever new CVX comes into the system, like with a bribe harvest, then what happens is all of the borrowing users' debts are paid down. They're reduced by the amount of yield that they earned, and the CVX itself that was harvested is placed into the furnace. And then, as I mentioned before, the furnace is a place for users to come swap their Clev CVX into real CVX. So any user with an active request into the furnace to swap from Clev CVX to real CVX will get their share of the new CVX coming into the furnace. I guess while we're talking about the furnace, the function of the furnace is to help to maintain the peg. So you're always able to access some CVX for your Clev CVX at 1-to-1. So there's an arbitrage opportunity there to help maintain the peg. The workflow, or the actual sort of usage flow, now that I kind of described the high level picture, the usage flow on the website is you start by locking your CVX here. You choose some amount to lock. You have to, of course, approve and then lock. And once you've locked, what you will see over here on the right-hand side is you will have a certain amount of claimable future yield, right? So in my example, if you lock 100 CVX, you will immediately be able to claim 50 Clev CVX as future yield. If I choose to claim that 50 Clev CVX and go through the process here, what I'll see is that my claimable Clev CVX drops to 0. My outstanding debt increases to 50. And at that point in time, I just sit back and wait, because what will happen is when the underlying CVX that I have deposited is has a bribe harvest, I will see that my outstanding debt reduces and my claimable CVX, Clev CVX, increases, because you can always borrow up to the maximum 50% of the amount that you've locked. So for some users, what they will want to do is borrow their Clev CVX, swap it to CVX, and then redeposit yet again. And then in this way, you can create a leverage position on your CVX, and you can loop that, given that we do a 50% LTV, you can loop that several times and approach a 2 times leverage on your CVX farming yields. The way that the furnace works, as I mentioned before, is you just make a request. So if you have some Clev CVX that you want to swap for CVX in the furnace, you basically just deposit it here. And when you make a deposit of Clev CVX here, it adds you to the list of requesters for the next harvest or the next CVX income to the pool. And that CVX, as it comes in, is distributed proportionally to all requesters. So if there's 100 CVX requested and only 50 CVX comes into the furnace, then everybody will get half of whatever they requested. That makes sense. When you make a Clev CVX request here and you make that transaction, you'll see a second window below here that indicates how many pending CVX you have coming to you and how many of them are claimable right now. So once you make the request, you will accrue claimable CVX with every inflow of CVX into the furnace, and you can claim that whenever you want. You can wait to get your whole claim or take it early. It's up to you. And I think in a nutshell, that's it. I might jump over here and show just sort of, just to kind of hammer this point home. Hopefully I'm not boring you by now. The diagram kind of helps to visualize a little bit what the system does and how it works at a high level. You start with your CVX, you lock it via Clever, and then behind the scenes, it's vote locked, and then bribes and rewards are harvested. Those bribes and rewards go to paying back the debt that you have, And I should also mention another important thing. Even if you do not borrow against the CVX you deposit, you still earn your bribes and rewards. It shows up as claimable Clev CVX in the system, and you can take that Clev CVX without incurring any kind of debt if you haven't borrowed previously. So you've got two ways to get Clev CVX. You can either borrow it against your initial deposit, or you can earn it automatically. And then in order to get back to vanilla CVX, you either swap through the curve pool, which doesn't exist yet, or you swap through the furnace. So we think this is pretty awesome. Like there's a bunch of really important aspects of the service that is worth talking about. And maybe one is the type of lending that this is. We're claiming our future yields, which is the equivalent to thinking of borrowing against your deposited CVX and having it paid back automatically. But there's a lot of types of borrowing in DeFi, and this type of borrowing that we employ in Clever is actually pretty great. It's pretty amazing. So the idea here is that when you borrow a synthetic version of a token, we do not need to use any kind of oracle, right? Typically, if you're considering borrowing a stablecoin against some kind of collateral, you have an oracle risk associated with, you also have the concept of course, because the loan will have some kind of depending on the value of the collateral versus the value of what's borrowed. But in the case of borrowing a synthetic version of the real token, the two prices don't vary independently, and the synthetic version doesn't exceed the value of the deposited version. So there's no concept of liquidation in this type of borrowing. You also don't have to take on collateral risk for anything other than what you're borrowing against, right? If you mint a stable coin against some kind of collateral, you actually are taking on the collateral risk of every other type of collateral accepted for that stable coin. Whereas with a single paired pool between the synthetic and the real token, you don't have to take on the collateral risk of anything except for the one type that you actually choose to deposit. There's a pretty big security benefit to that. And there's a lot of really like continuing interesting stuff to talk about here, and I would encourage you guys to take a look at the launch article that we wrote. Excuse me, because that helps to paint a picture of why we think that the lending model is really powerful, and how everything all works together. But I'm happy to take any questions or clarify anything that I kind of blasted over. I should probably mention that right now we're in a limited operation phase that we're calling a beta phase. Because of the lack of the liquidity in curve pool, the furnace is a sort of bottleneck for swapping your Clev CVX back to CVX. And so the thinking at this point is that we want to get this product out into the world, and we want to get people to take a look at it and get excited about what we can do before we get around to launching the liquidity. And so what we've done is we've just slashed the fees. Normally we would take a 20% fee on all yields harvested, and for the beta period, we've slashed that down to only 3%. And that'll stay there until we launch liquidity and make it easier for people to swap back into CVX. Because of course, as you can imagine, if you do even a single redeposit, a single leverage loop back into more CVX, you borrow half of what you have deposited, and then redeposit that half. Even given even after the fees, you're still earning 120% of the rewards you would have otherwise earned with your bare CVX. And that's after factoring in, all of the tough stuff is included there, right? All of the vote locking of the CVX and bribing and harvesting and swapping, all of that. So if there are any questions, happy to take them. Or Charlene, did I miss anything? Do you have anything to add?
Yeah, I think probably that's just helpful if we can just show what's the existing locking, bribing, and harvesting process if the user actually, does it themselves.
Sure. Do you want to speak through that, Charlene? You're more of an expert in it than I am.
That's okay. Go. Feel free to go ahead. I think you just need to show the voting process and also, what people need to do on voting. I think the bribes probably haven't been put up on voting yet. It's probably coming tomorrow.
Stand by.
Yeah. So I think the voting has already started today, right? So the convex bribe process runs on like every second week on per epoch basis. So people need to, every 2 weeks, people actually need to vote on the snapshot proposal. So Kruger, you can show that, right? Convex snapshot proposal. There are a long list of votes people actually need to choose. It's
Sorry,
on
I can't.
Convex website, Convex.
Oh, right. And the
Go to vote page. Yeah.
there it is. Thank you. And we want to take a look at this guy.
Yes. Yeah. Let's open that. Your screen is not moving.
No, it's not moving on my end either. Is the do I need a connected wallet in order to show that?
I think that should be okay. It's just coming
Let's try
slow.
again. There we go.
Yeah. So there are a long list of votes people need to choose which one they want to vote, right? And people need to actually check across with voting what the bribe rewards they're going to get for voting for each of the votes and compare the ratio, right? Which one has a higher ROI. And people can also delegate that to voting, right? But voting just, vote on a number of things, right? So at the end of the voting period, right, if you delegate that to voting, you're going to probably get 7 to 8 different tokens, right? And that for retail investor, that's just too time consuming and gas cost consuming, right? Because people need to sell these tokens and sell it back to Convex and deposit lock with Convex again and just to increase their voting power. So Clever actually does this all, right? So all people need to do with Clever just lock their CBX on the platform, right? And so the product will do all the backend heavy listing stuff for them. And they just need to see the rewards come in as Clever CBX. And then, yeah, that's the part Kruger covered. People just can go to change their Clever CBX into real CBX, either through the liquidity pool on Curve, or they just go to the furnace and swap into CVX when the real CVX come in.
Yeah, I think it's also worth it to mention that the locking period for vote lock CVX, you bring your CVX and you lock it for a 16-week period. And then after that period is up, you have to go back and relock it if you want to continue voting and earning. And so that's another aspect because it's the Clever solution takes the bare CVX in and vote locks it on your behalf. We're able to actually re-up that lock every 16 weeks. So in addition to doing all of the process that Charlene just described for you automatically, the Clever system is a really much like Concentrator. It's like a set it and forget it kind of a thing where you can allow the system to work indefinitely, right? You don't have to come back to babysit it. And that's one of the reasons I highlighted the fact that even if you don't have debt, you still accrue claimable rewards. Again, you accrue these claimable Clev CVX as your yields are harvested. So if you were to come to Clever and deposit your CVX now and then borrow maximum and redeposit, over time, your debt will get smaller and smaller and smaller. And eventually your debt will be paid off altogether, at which point in time you will just accrue claimable Clev CVX. So there's not a point in the process of using Clever where you absolutely have to come back and babysit it, right? Like it will do good things for you as long as you leave it and let it work.
And Clever is helpful to manage tax situation as well. So people can just, don't withdraw the yield. Whenever, their yield come in, they can just keep levering up, right? And they just expand their asset base, right? And to make it growing forever and to keep earning yields on that until, right, they want to pay tax and they can withdraw that. So people can really manage their tax situation and timing for this based on this product.
Yeah, having the power to choose when to claim is the real secret sauce with tax.
Yeah, and another way to play this product is, you can think of it as a securitization of your future income, right? So if you do this convex vote by yourself and to do all these rounds of transactions for every epoch, right? And so in a year's time, you're going to earn 50% APY, right, in convex space. And you can actually withdraw that future income today, right? That's why we say this product use Clever and you can get your future yields today because you can just borrow 50% of what you deposit and just earn that back in a year.
Yeah, I think one of the potential scenarios is that if you're worried about if you want to hedge against like CVX downside risk, you could borrow and swap into a stable farm or something, and then you've got a nice, you've hedged your future yields against the CVX downside.
Yeah.
So I'm curious, like, is this clear, or are people just kind of scratching their heads and trying to like wrap around this?
Hey, I have a maybe simpler question. When you borrow against your Clev CVX, can you just tell us what happens under the hood that is enabling that? Like, I guess what are we doing? We're depositing CVX, we're getting Clev CVX, and then I guess you're allowed to take. Yeah, actually, if you can just kind of like walk me through that one more
Yeah, of
time.
course.
This is one of the few things that really throws me off.
Yeah, and it's and explaining this clearly is a real challenge. So I'm sure I can do better here. So you lock CVX with the platform. Okay, you bring your CVX to the platform, and you lock it with Clever here. And what happens then is that CVX is immediately vote locked. Okay, so we now have, the platform now has, if you bring 100 CVX to Clever, the platform now has 100 CVX. Okay, we mint 50 Clev CVX, or up to 50 if you choose to borrow, against this CVX. Think of the locked CVX as your collateral. Okay, the locked CVX is deposited. We're minting 50 Clev CVX against that and giving it to you. Okay, that Clev CVX is backed by real CVX in the system. And so there is actually a mechanism if you chose to just directly repay what you borrowed early. There's a fee for that, but you could just pay it back early. But with CVX, because you're able to earn such high yields on bribes and rewards, what the system is built for you to do is to let the rewards pay back your debt for you. Okay, So you've borrowed Clev CVX. There's now real CVX in the system. You have these two ways to swap your Clev CVX into vanilla CVX, real CVX, however you want to put it, like CVX. You can swap it in the furnace, or you can swap it in a liquidity pool on Curve. So for the purposes of understanding how the system works, let's assume that there is a liquidity pool on Curve that allows you to swap your Clev CVX into CVX. Once you've swapped back, you can kind of do whatever you like with it, including taking that CVX and depositing it as well into the system, and in doing so, creating leverage. Right? You deposited 100 to start, but if you borrowed 50, you can now deposit those extra 50 for a total of 150 CVX earning yield.
Is there any incentive for folks to deposit into the Curve pool?
Yes. So the way that the fees are structured is that we take 20% of, now again, this is when the system is in full operation. Okay. So if we're talking about the Curve pool, then I'm assuming the system is in full operation. There's a 20% fee charged on the yield that's harvested. And half of that, now remember, the yield that is harvested is immediately swapped into CVX. So the fee that we are charging is actually charged in CVX terms. And half of that is going to incentivize the LPs in the Curve liquidity pool. So this is actually kind of really important because there aren't a lot of, there really aren't options in DeFi for earning yield, high yield on liquid Curve. Right? If you want to earn bribes, you have to lock into liquid CVX. If you want to earn bribes on your CVX, you have to vote lock them. It's locked for 16 weeks. You have to go through the locking process, the voting process. Whereas if you just have liquid CVX, you stake it on Convex and it's like 2 or 3%, right? So one of the side effects of creating a Curve pool for this product is going to be that there is actually now a place in the liquidity providing for this CVX, Clev CVX, CVX pool, is that there's actually going to be a way to earn yield on your liquid CVX that is at least partly denominated in real CVX terms. So half of that fee charged goes to incentivize liquidity in that pool. And there will also be a native token component as well to get the yields up to where they need to be in order to make sure that we've got a good depth of liquidity.
This helps. And then one last thing that we covered that I still don't fully understand. What happens in the furnace? So like if I've locked in my CVX and I now have Clev CVX, why would I go to the furnace versus going to the Curve pool, assuming like we're up and running and everything's working as intended?
Yeah. So the furnace, that depends very much on the state of the peg for Clev CVX versus CVX. The furnace will always offer you CVX for Clev CVX at 1-to-1. And so
gotcha. Okay. Yeah.
That's always the best.
Yeah. Yeah.
And the hope here is that we eventually get to a point where the furnace is really only used by arbitrageurs to sort of reinforce the peg in the small numbers of like fractions of a percent kind of thing, right?
Yep.
Obviously, the fastest, easiest way to get CVX is going to be to swap it in the Curve pool.
Yep. Absolutely. Yeah. This is like the equivalent of when you go on to Convex, you can you can mint CVX Curve 1-to-1 with Curve, but sometimes you can get there's an arbitrage opportunity there in the Curve pool if you just swap that Curve versus CVX Curve.
Yeah. Like now in CVX Curve, the arbitrage opportunity would have to be for like if CVX Curve was above its peg, right?
Right.
And typically for those kinds of those that's pretty rare. But for the arbitrage opportunity in furnace is going to be if Clev CVX is below its peg, because then you can bring, CVX. You can basically get your CVX 1-to-1 for your Clev, and then sell it into the curve pool at whatever the discount is, if there's a small, if it's off peg, by any amount, right?
Yeah.
In the meantime, during the beta period, of course, because there is no curve pool, the only way to get CVX for your Clev CVX is here in the furnace. So this is good. This is a bottleneck during the beta period, and it's the reason why we're not charging the regular set of fees, right? So basically, anybody who comes and brings CVX right now, if you choose to borrow, you get a bunch of Clev CVX, and then you would probably come straight to the furnace to sort of get a share of all the new CVX that comes in with the first harvest. Something maybe interesting to think about as well is that Clev CVX is every Clev CVX anywhere in the wild is always backed by at least one real CVX in Clever. So, you know, if you try to imagine some kind of catastrophic scenario, if you imagine some kind of catastrophic scenario with either the peg or whatever, you kind of have to remember that it's always possible eventually to get CVX back for the Clev CVX that you have, right? But you're basically taking a time risk where if you borrow your you know, you can always get one-to-one in the furnace, and in the worst case, if there's like a lot of people who are claiming on the furnace, you just have to wait for those yields to be harvested, right? They can't be paid back. Those yields will always be coming in because there will always be CVX in the system, because there has to be CVX in the system in order for there to be Clev CVX in the wild, right? If that if that kind of makes sense to you. So like the only time Clev CVX is created is it's minted against real collateral in the system, and the collateral obviously has to stay as long as the Clev CVX loan is outstanding, or it's minted against real CVX that is coming in from the yield harvest, right? Those are the only times when it's created, and so there's always going to be a chance to burn back to CVX at one-to-one. It's just a question of a time risk.
It's not time risk, right? It's just, you know, traded time value of your token, right? That's why Clever will issue a token, and that token will be used to incentivize liquidity on Clever CVX and CVX trading pair. And this model can extend, you know, to other farming asset as well, like ACRV and other, you know, votes on concentrator. So we call it Clever, right? The initial thinking was just concentrator lever. This is just a leverage farming solution, right? For people to really draw down on their future yields today. And I think it's so right that DeFi that compare this to CVX CRV, right? So CVX CRV, just one CVX CRV equal to one CRV, but the difference is the CRV is locked for 4 years at the back end, right? And they give you CVX CRV one-on-one, all liquid today, right? That's why CVX CRV had quite, you know, a bit pressure to keep it packed. Right, I think, you know, concentrator definitely help to keep CVX CRV, you know, packed better, right? And you hardly see any discount these days, but it used to be like 5 to 10% discount before. And for Clever CVX, we have, you know, better chance to keep it packed because, you know, the CVX actually only locked for 16 weeks at the back end. Right, and the collateral ratio is only 50%. So, you know, there's a, you know, lot less pressure compared to CVX CRV to keep this packed. But, you know, as we bootstrap liquidity, if we can achieve deep liquidity on Clever CVX and CVX pair, we can increase the collateral ratio over time, right? And from 50% to 75, or, you know, maybe 90 or even higher sometime in the future.
Hey, this is a question I saw in the Twitter thread when Clever was announced, and I know the answer to this, but I think it's a good point to reiterate. would anyone want to answer how is this different from bent finance? Someone had a question there in the thread, and yeah,
Well,
just
yeah,
yeah.
that's very different, right? Well, I think there are a number of products in the market, including band finance and redacted and Olympus, right? And this product actually, they play the game that they actually get user to hand over real CVX to them, and they give people another synthetic CVX, but people will not get the real CVX back forever, right? And so I think Clever is the product that people would definitely we help people to maximize their yields with these leverage services, right? But people will get all their real CVX back, right? And so that's a very different philosophy and concept and a very different product.
Yeah, I mean, really, one of the things that we're struggling with in communicating this is that it seems like the majority of like products built around CVX in the ecosystem are designed to either like take your CVX permanently, or at the very least to basically convince you to rent your CVX to the protocol and allow them to use it to vote for their own purposes.
Yeah.
So, it's been quite interesting because when we first start talking about this concept to a few people, particularly in the convex community, they kind of immediately assume that we're running one or the other of those kinds of the games, right? They immediately assume we're either trying to suck in a whole bunch of CVX that we then control, or that we're trying to like trick people into letting us vote for our own stuff with it. And neither of those two things is true of Clever. This is a as Charlene likes to say, this is a leverage service, right? We charge a fee on the yields. That's how our incentives are aligned with the incentives of our users, and we want we want users to get more CVX for their CVX, right? And I go to great pains in what I have written to say that we are voting for whatever earns you the most number of bribes. We are then swapping that maximum bribe value into CVX and using that to pay back your loan. And I think that's really important to kind of highlight, right? Your CVX remains your own as long as it's like locked in our system. You can claim it back, assuming you don't have an outstanding debt against it. Your yields come in Clev CVX, which you have these ways to swap to real CVX, and we're voting again. We're maximizing those bribes. So it's your CVX, maximize bribe income, and that's kind of a big part of the message that we need to make public to everybody.
Yeah, and I want to answer Ronnie's question in the chat. So there are over 50 million CVX that's in circulation, right? And I think over 40 million of the CVX has been locked to this governance process, right? So there are very little, liquid CVX in the market right now, because you remember that CVX locking contract had a bug a while ago, right? So I remember that was during the Aladdin talk we had, right? There was an accident, so all the CVX get unlocked suddenly, and all relocked within that week, right? So we are heading into, like a big unlocking event in June, right? So there will be a wave of CVX, like over 40 million CVX will get unlocked in June, right? So we will be prepared for that wave, and so we're going to issue token and incentivize liquidity around this, right? And try to suck in as many CVX as possible, right? When this, this wave is coming in June. And so I think Clever CVX really help retail participate in this convex game, right? Because convex game has been a very DAO-to-DAO game around governance and bribes. And it's just too much work for retail to participate in this in terms of process, know-how, research, voting, harvest, right, and also sell and reinvest into CVX. And it's just quite complicated and a lot of information holding there. So I think Clever CVX will be very well positioned to serve like all the retail to participate in this game, and also on how this is going to benefit Aladdin Treasury. The game plan is we're going to have a separate token for Clever. And the token distribution we're thinking is 30% of Clever token will go to Aladdin Treasury and be managed by all income from that, and will just benefit everybody in the community and ALD holders. And 50% of Clever token will go to liquidity mining, and we'll use 10% of the token for IDO, and just to raise some CVX and Ether to seed the initial liquidity. And we plan to reserve 5% for dollar reserve. Just any costs need to be covered on Clever side alone, and also 5% for airdrop. So that airdrop will be used a number of ways, including airdrop to Convex community, to the early users of Clever, and also to staked ALD holders.
Does that then include a plan for? I noted the Aladdin treasury in terms of like tokens that are earmarked for the Aladdin treasury. Is there any planning or thinking already around like XALD holders, or just ALD holders? I like XALD because anyone who's holding XALD is clearly signaled their support, and hoping there's like a kickback there for those sorts of users that have been along for the ride for Aladdin.
Yeah. So say if we can lock $100 million value of CVX with the platform, right? That will bring like 10 million US income to Clever alone, right? And Aladdin will get like 30% of that, right? And the same for concentrator, right? So we'll have a separate token for concentrator as well. And so we're thinking of similar token distribution, like 30% to Aladdin Treasury and 50% to liquidity mining, right? And raise some 10%, raise some capital, right, to seed initial liquidity, and also 5% for dollar reserve and 5% airdrop to concentrator early users, curve users, and also and XALD users. So XALD stakers are going to benefit from concentrator and Clever a number of ways, right? Definitely there will going to be a number of airdrop happening, right? And on the 30% of token locked, managed by Aladdin Treasury, right? So any income to that, right, will be distributed to XALD holder. So ALD will become like a token people can hold, or just get hopefully lifetime income stream, right, from anything we build. So we have concentrator now, and so we are trying to bootstrap Clever, right? And I think we're going to continue to identify more problems and where value are created in DeFi ecosystem, and just build a lot more in the future. So Aladdin will be like a community-driven venture fund and farming fund.
Yeah, I don't know. Maybe maybe just to sort of reiterate, I talked about the fee that's taken on the yield harvest, the 20% yield. Said half of that goes to incentivizing liquidity. The other half is distributed to the Clev token holders, which again is where, just to maybe to fill in that gap, like that's where the income stream that's coming into every Clev token holder is coming from. And then given that Aladdin holds these, like 30% of the Clev tokens is held by Aladdin, then Aladdin would pass those revenues on to ALD token holders.
Yes.
Awesome. Yeah. I'll as long as there's a clear feedback mechanism or just reward going to those XALD ALD type holders. Yeah, I'm excited for that. That's part of what's been so exciting about all of these products being developed is I think it's been that the hope of you know uh, rewarding those long-term supporters because obviously we've pivoted a lot. There's
Yes.
what was originally designed. I stand by that. I thought it was a great idea. Obviously, we've continued to like deliver a certain amount of knowledge every week, but I think these products are very timely and actually stand to add net new value, to the DeFi community, especially considering this is very complementary to Convex and Curve. One of the things I think we're all challenged to do is make sure that the greater community understands that, yeah, we're not trying to lock up their CDX tokens forever. We're not trying to compete with Convex. Uh, all of this is meant to be, a value add to those two communities. So, anyways, yeah, great work on all of this. I appreciate you explaining it all.
Yeah, thanks for your questions. And if there's any more, like DM us anytime. I have infinite patience for questions. I have young children, so I have to.
Yeah, and I think there's one more thing worth noting is there will be a lot of synergy between concentrator and Clever, right? And Convex is only the first asset Clever supports. So we'll go into all this, any vaults with decent size and yield, and we can just add leverage to that. Right? I think if we support ACRV, right? ACRV has like 50% APY on that. So people can just do multiple rounds, right, to lever up and to earn, as much CRV as possible. And we can also use this solution to go to ST-ETH vault as well. And also, the stablecoin, the Frax, and also UST vault if people want to earn more rewards there.
Yeah, the ways that Clever and Concentrator are sort of composable together are, there's a lot. We have a lot of we have a lot of room to play here, a lot of room to sort of use each one to build the other one up more. But I think throughout all of that they will stay independent, and all of the sort of interaction between them will be based on the sort of baseline composability, sort of the that basic DeFi magic, right?
Yeah, and we really appreciate, right, like all the support, the Boule member give to us, right, and DeFi that Ronnie, right, Mr. Massa, right, like all you guys have been supporting us throughout the process, right. We had a lot of up and downs, and we have been inspired a lot, right, by these meetings, and these meetings have been just so valuable, right, and we decided to build some solid product, right, on back of these ideas, right, and really build up the economic value of this system and to reward ALD holders, right? So we want people to hold ALD and they can get a lifetime income stream from everything we build.
I saw a funny tweet earlier today that the something like I'm massively paraphrasing here, but like the defining characteristic of DeFi 3.0 are going to be like products that actually have revenue to perform a service and have revenue. So we're leading that charge on that.
So, what is the next milestone here? Like right now, we're in beta, and so we don't have a curve pool stood up, which just means that if I deposit my CVX, if I want to like lever up or basically maximize my earnings, I'm not as. Also, this assumes I'm not in a hurry to need to uh, uh, need to like unlock that CVX anytime soon. I could then borrow up to 50% of my Clev CVX, burn it in the furnace, get back more CVX, and basically repeat the process a few times. What's the next major milestone? Is it the curve pool that will stand up, or yeah?
Yes, it is. Basically, the only difference between what we have now and the eventual full operation of the system is this is the curve pool with and we'll need to seed liquidity there because there's going to be, especially initially, there's going to be a high volume of Clev CVX that wants to swap quickly to CVX in order to create that leverage. So as soon as that curve pool gets stood up, then we're basically in the sort of final form, right? The curve pool will get stood up. The fee structure will change. We'll go from a 3% to the full 20% fee structure. We will start incentivizing the curve pool with some of those fees, and that's it. I mean, it's really kind of just a two-step process, I think, Charlene, unless you disagree.
Yeah, so the strategy now is definitely just lock your CBX with Clever, let Clever do all the backend heavy lifting work for you, and to get the rewards back to you. And I think, to use that product with full potential right now is just, just borrow 50%, click CBX straight away and deposit to Furnace, right? And try to get a bigger share of the real CBX when they come into the Furnace. Right, and once liquidity pool is launched, and you can just add a few rounds of leverage, and immediately, right, the max you can add to 2 times leverage, and this model, right, is really I think we have talked about it, right? The beauty of this lending model, right, is really the safest model out there. You think about it when you actually borrow from Compound, Arwave, or Maker, right? You really worry about this when market gets so volatile, right? You want to go there to check if you have sufficient collateral. If not, you want to add more collateral. That's why every time when market's so volatile, right, the gas costs are so high because people are busy with liquidation, right? And you also need to worry about if things get liquidated at the right price. Right. And the other thing, with all this collateral-based, CDP lending model is you actually take collateral risk from other collateral, right? In particular for, really aggressive protocols like, MIM, right? And so you actually take the collateral from like things like Wonderland, Olympus, right? And also, like some Shiba, right? Like all the risky tokens. Right, if some of those assets are not liquidated properly, right, the token may get the stable coin may get depegged, right, and you take on this risk as well, right, and some other times when you borrow from these lending pools, right, and they're the liquidity in those lending pool change suddenly, right, and the utilization ratio could change suddenly, and that can drive up, the interest rate you pay crazily, right? And there are a lot of things to worry when you actually borrow from, the CDP model. But with this, right, you don't have any of those risks. You don't need to worry about liquidation. You don't need to worry about, if the right price or not, because, there's no oracle at all, right? And you only take on the risk of that specific collateral, and your cost of funding, right? The interest you pay is fixed. It's just 20% on the yields, right? You earn. If you earn nothing, the platform charge nothing, right? And this model really is valid is because you think about it, right? When we take on deposit to the platform, right? We don't have to solve liquidity like 100% of the asset we take on. Say if we only take 100 CBX lock with the platform, we probably only the cost base for the protocol probably only need to incentivize for 20 CBX, right? 20% of that. How about if we grow the asset base, right, to 1 million CBX, right? When we take on 1 million CBX, right, we probably don't need to solve, incentive for 200,000 CBX liquidity, right? So, the liquidity pool doesn't need to grow linearly with the asset base, right? But the revenue actually grows with the asset base linearly, but the cost base actually doesn't grow linearly with that, right? And so that's why we can achieve economy of scale, right, of this model. But the asset we take on just need to be things that with decent size and also decent yields. Doesn't make sense. So I'm just saying this protocol could be really profitable as we ramp up on TBL.
Mhm. Yeah, and I mean I don't know, just one of the things that I kind of thought is worth highlighting, especially what Charlene was talking about earlier about this sort of providing a way for retail users to get access to this game. In the article that we wrote to kind of launch it, we had kind of a silly like the excitement section at the top of the article kind of talks about how there's all of this huge battle for stablecoin liquidity is going on between these massive players, and it's really kind of unique to DeFi that a retail level user would have any hope of being able to participate in that that scale of a sort of money movement at all. And so it's really quite a unique opportunity that retail have, and by kind of opening the door for people to be able to come in and take a little slice of this, to me that really is helping to meet some of the bigger goal of DeFi, which is like giving more access to more people for things that they used to not have any hope of being able to get a sniff at. All right, Charlene, I think we've reached our hour.
Yeah. So so feel free to reach us if you have any further questions. We are just so excited to discuss everything about Concentrator and Clever, so I think that's just the end of today's meeting, and so we can continue discussion in our DMs, Discord.
Thanks for dialing in, everybody.
Thank you. Bye.
Okay, thank you, everybody. Okay.
Thank
Bye.
you.
Hi, everyone.
Thank
you.
you, Dad. Okay, bye. Do we want to talk a few minutes? Okay, it's all gone.